What's up, my fellow traders? Hope you all having an awesome weekend. Yet another week and lots of uncertainty. As you can see, the Middle East situation is right in front of you, and in this type of situation in the world, we need to be really careful for the trading. And I'm going to show you how I personally took the trades in this type of situation, and my entries were not really aggressive. It were mainly less aggressive, and the way I took the trades with a certain market, I'm going to show you all that so that it will help you to take efficient trading decision when there is this type of certainty happening in the world. Now, last week, 2 trade alerts was sent and both hit stop losses. When I show you the profits, I also want to keep yourself aware that not every week can be profitable. This is something I'm talking about, just priority trade alerts that are sent to the members, not the personal trades which I personally took. If you are my student, if you know the full trading system, then there are lots of opportunities in the market. It's totally up to you how you want to enter those trades. Now, learning a concept or learning a course or getting signed up to my priority group doesn't mean that you become a millionaire, you become profitable just by next week. It will give you a good idea that what I'll be personally looking at in the market. If you are already a trader, then it's worth having these zones set rather than just taking your trades blindly. If you are my course student, then make sure and remember it will always take time to understand the full system. You can't become a pilot after finishing your flying degree. It takes time, it takes experience. That is why I share all my experience in my weekend's video. Now I want to show you some zones, the way I entered the trades in a less aggressive way. Some played out. That is something I want to show you what happened if it won't play out, and if it plays out, how that played out. So tons of knowledge in the first part of the video, and if you want to skip directly to the analysis part, then you can always refer to the timestamp you can see in the timeline. Now this part is going to reflect on a net gas analysis as well, as we had an entry condition on net gas and how I entered with a cautious, being careful that there's a lot of volatility in the market and price can give us some dramatic move, and what shall we do in this type of situation. Now that is why if you're watching a first part, it will all make sense when I go to the net gas analysis part of the video. Now here was a double bottom pattern that happened on 1 hour time frame. Now here, as you can see, the price formed a clear double bottom with a divergence in the RSI. The odds were in my favor. We are in the major zone, right? The price formed less aggressive entry, which is my double bottom pattern, happened on 1 hour time frame. Everything is going great. So I entered right here, and of course, the news events that push the price dramatically down. Now, my original target would look something like this, but I've decided to keep my stop loss below the zone that was also sent to the members right here, as you can see on your screens. Now, I kept my stop loss below, and I've already mentioned that I'm using a bigger target due to uncertainty nowadays. That's why SL is below the zone. So that is what I decided to do by keeping the stop loss below, because I want to give room to the market to move, and then it can sometimes push back up by having a protection of demand zone here. But of course, we can't be right 100%, and price dramatically pushed down, hitting my stop loss, stopped me out right here. So that was a good example of me being very careful and having a calculated risk, which is keeping my stop loss below. So this time it did not play out. I want to show you one more trade. I'm going to go to net gas after that. Now right here, as you can see, GBPCHF right here, this was the zone report sent to the members last week that I'll be looking to enter my buy trades from this zone. So as you can see, the price formed a bullish engulfing pattern at the lower level of my zone. If you follow me, you know I want to see some good momentum below the zone to look for my entry condition. But when the next candle forms to be a bullish engulfing pattern, I entered my trade right here. This trade is still running. I'm not sure what's going to happen, but I've set my stop loss to 1.4 200 watt risk ratio. 1-to-1 could have been hit if I'm using the smaller target. But now I want to show you this trade. My stop loss was way below this week, and I want to have the protection of these liquidity area so that even if the price pushes down, I have some support of the liquidity zone that can still push the price high. And that has exactly happened here, and that worked out here on GBPCHF. Now, I did not enter blindly. I looked at my zone and I've calculated my stop loss by putting it bit below these areas to have some protection, and that is this time it played out. So I did not lose my hope by having one losing trade but I've used the exact same method for another trade, and that nicely played out. A good example of net gas I'm going to show you next. Right here on net gas. Now if you remember in my previous video, I've clearly said that if we have a double top pattern, and that could be a very aggressive double top, if you want to enter, keep your stop loss above. I've clearly mentioned from my last video. And now if you are my student, you know what double top pattern is. A minor double top pattern has happened. First top pullback, second top followed by red candle. Again, if you're my student, you know all the rules for that. Now here, I was really careful, and I want to have some room for the price if the price pushes up due to some sort of volatility. I did not use one ATR. Instead, I've gone an ATR above my entry candle. Now if you go back and scroll back and see, we have an area from where the price previously rejected right here. So I've aligned my stop loss according to that and put it bit above the previous area from where the price rejected, and that is how I did my analysis. And if you see how effective it is, the price pushed up right here. Now at this point, aggressive entry might not play it out. Now if you know, I've mentioned at the start of my video that in this type of situation, I'm very cautious. Instead of entering aggressively, especially from the minus zone, I want to enter less aggressively. That is a double confirmation, which is my double top entry pattern, means we are rejecting twice from the zone and price will likely to push down. And by keeping my stop loss aligning with the ATR, price did push up without hitting my stop loss and push back down, hitting my take profit. Now that's a lots of panic for the traders who have no idea what to do when the price pushes there. You might be seeing a green candle pushing up, and you might be seeing that the zone is broken and we are now heading towards the next level. Instead of that, I waited for the price to close first. So this candle closed as a bearish engulfing candle as well. But my entry was here. I was aligned with my stop loss. Price pushed back down, and instead of buying, I sold, and that nicely pushed down. Now it is something you can't say you have not mentioned. I've clearly mentioned in my last video that be patient, and you see how nicely from this target to this target we take the profits, and then from here we sold. Now it was something that was also sent to my members. Right here, this zone was clearly mentioned to my members. Nemex, Capital.com, and on Oanda. For Oanda, we mark these zones right in my YouTube videos, but on Capital.com exactly here, and Nemex exactly nicely pushed back down from my zone, and it is not something we guessed. It is something we were prepared of, and as you know, I trade nat gas on Oanda. That is why I took my entry right here. So you see how careful I was with my trades. I'm doing my analysis very cautiously. I know that the market conditions are really unpredictable, could be unpredictable in this type of situation, so I want to be entering less aggressively rather than enter aggressively. Now another commodity, that is corn, and as you can see, we have the zone below, right? I mentioned that if the price pulls back to my zone, in that case we're gonna go long, and as you can see how nicely the price pulls back to the zone, nicely pushing back up, hitting the targets, and that is how we need to do our analysis. I did not enter, but I have some members, some students who are really trading commodities, soft commodities like corn, coffee, cocoa. That is why I send these zones to you every week so that you can take your trades. So sometimes I do take trades here on these soft commodities, but this time I did not enter this one. One more trade I want to show you right here where I've entered less aggressively, which is EURGBP. Now right here, if you are my student, and if you follow me here, we had a 382 candle, and if you see, my entry was not at the close. My entry was around 5 pips below my entry candle. The reason was the price forms a candle, and if the price, let's say, start to push back up, I won't be involved in the trade, and after a couple of hours I will cancel my sell stop order. Now as you can see, it was a zone that was sent to the members from last couple of weeks. I've been sending these zones to my member that I've been looking to enter my trades right here. And as you can see, this was the zone sent to the members, and as you can see, I've said that I've been looking from this area for the possible sell trade if the price push up to this level or below this level that the price did not make it, but we still have this zone to look for the possible buy trades. For now, we were looking for the sell trade as the price hit the level of resistance first, and I did not enter right at the market order. I decided to enter with a buy stop order, which is the safest order for me, but in this type of orders, in limit orders, you can sometimes miss your trading opportunity. But again, it's my own decision. That is why I put these strategies in my course so that you know when you can take aggressive entries, when to take less aggressive entries. When there is an uncertainty in the market, you can decide everything on your own rather than relying on someone else's signal. And that is why I always say, be patient when you learn. Take it easy on the courses. If you are learning from me, if you are learning from someone else, it is not a holy grail that you can just start making money next day. You get these experiences in time, and I hope after some time you will thank me that, oh my, yes, you were right, and now we understand what you meant. Now here, less aggressive entry, and that hit my take profit easily for this pair. Now last one I want to show you, this pair. Now this entry I missed personally because I've entered with a buy stop order when the price was somewhere here, not here, but it was somewhere here. So I've entered with a buy stop order, and after couple of hours the market quickly pushed back down. Here I exit. I've cancelled my order because there was 2 4-hour candles, so after 8 hours I've cancelled my order. Now here I missed this trade, but it was a zone that was mentioned with my members in the live session. I've mentioned that this is an area from where I'll be looking to enter my buy trades. Looking at this nice double bottom pattern on 1 hour, a nice bullish candle right here. I've decided to enter less aggressively, and here if you enter with the market order, you might be in profits, and let's see how it goes. It might hit your take profit as well. You will be involved in the trade, but for me, I was not involved in this trade. That is a disadvantage of taking your trades in a less aggressive way, but that is totally fine. For me, I've taken the other trades. For me, it's totally cool. And I know the risk involved in the market. When you enter the trades, you need to do all your analysis that what's good for you, what's better for your risk, what is your risk tolerance. And at that time, I don't want to enter with a market order. I want to enter with a limit order, with a buy stop order. And here I canceled that order, and I did not regret. I did not enter with the FOMO when the price come back up. Yeah, if it's cancelled, it's cancelled. I'm going to move on and look for the next opportunity. But it was something that was mentioned to my members, and that nicely pushed up. It is up all the way from here nicely in 70 pips profits. So that's it for the first part of the video. I hope you got a value out of that, and I hope you have understood how the importance of taking your trades aggressively in a less aggressive way, and the advantage of that and the benefits of that as well. So let's start our analysis with nat gas, gold, silver, and crude oil. Starting with natural gas, let me show you what I've said in my last video so that we can connect the dots from there. Also going to adjust my Fibonacci tool, which is right here. Let's see if we have a pullback to 50% retracement, which is an aggressive entry, and I'll set my buy limit order exact same entry. In that case, the longer term target, the bigger target will be 1.618 retracement by keeping my stop loss below this pattern, preferably below the EMAs. We had our Fibonacci tool set, hitting 50% and nicely pushed the price high. Now we are in the resistance level, but I'm still looking at 1.618 retracement for the bigger target. If the price goes inside the zone, forms bearish engulfer in the upper level or double top in the upper level, I'm gonna go short. Still inside resistance level and also inside a double top rejection zone, which is something like this. A candle has not closed above yet, but short-term sell trades which I'm expecting from this zone, just a pullback, that is enough to hit your sell targets. But double top is here as well. Keep your stop loss there. That is what you call prediction. Nice one. So perfectly taking a buy trades from here, exit here, and then we took a sell trade right at this double top aggressive pattern, and that nicely hit the targets. That is what I call patience and taking your trades with condition. Now if you have seen my first part of the video, I've explained how I've placed my stop loss for this trade. Feel free to rewind and look at the first part of the video. So nicely hitting my target of 1-to-1 reward to risk ratio. So at this point, what to expect? So I've exited my trade right a little bit above 50 EMA, as I know that we are in an uptrend, and I keep on mentioning that in an uptrend this pullback can be enough to hit your profits, and that has happened, hitting 1.2 to 1 reward to risk ratio profits here on this point. 100 points push down, which is a good amount of profits in natural gas. So simply what I'll be looking at this 50 EMA as my major support. In an uptrend, the price used 20 or 50 EMA for a level of support, and if you see right here, we are at 50 EMA. Now let's see how we opens. We have a good chance the price will bounce up from 50 EMA again, and it will start to push up and continue to push up in a trend towards the next level of major resistance, which is right up there, a major level. I want to mark this zones, which is 2.863, that goes up to 3.002, you can call it 3. It is a major level where the price will likely to head to. But looking at this bearish candle, we have a good chance of a pullback. Now this pullback could be till the level of trend continuation zone that was recently broken, and this level, in case you want to mark these on your chart, is 2.266 that goes up to 2.359 here on Owanda. That level is quite far, but in an uptrend we can see this type of push down and a big pullbacks. Overall we are still bullish, and 20 EMA has been broken. If in an uptrend, price first use 20 EMA. If fails, then it use 50 EMA. A good example of that is right here, and then price start to push up in a trend. Now at 50 EMA, if the next candle closes back up above 50 EMA and forms a bullish engulfer, I'm gonna go long from here till here, exit. If broken above, then we are looking at the level right here for the next possible counter trend trades, from where we can start to look at the bearish trade if we have a bearish condition. Exactly like this, we had bearish condition here, we go short after when we exit a Fibonacci trade. We're going to plot another Fibonacci tool once we are broken above this zone. Till then we are just looking for the pullback entry bullish. Now if we have a good and strong break below 50 EMA, we can still see this little channel where the price has been rejecting, from where we can see another rejection, or this trend continuation zone from where we can see a possible bounce back up. So that is why conditions are very important. Do not start taking buy trades blindly. I would like to see a bullish engulfing pattern above 50 EMA. Take my buy trades. If you want to manage it, you can manage it till this zone simply. If not, exit right at this first stop and look for the next condition, either with the pullback again, buy, and then exit here, look for the next sell trade. Look for the condition. If we have sell condition, we're going to go short. If there is no condition, price pulls back up, forms bullish engulfer, we're going to go long again and keep on taking long. So that is what I'll be looking at here on Netgas. Here on Capital.com, the level that has been broken recently, an important level which is 2.505 that goes up to 2.609. Now as you can see, we have a bearish engulfing pattern on a daily time frame. That is also kind of double top, not very clear, but it is a double top on a daily time frame. That is why a big pullback is expected on a daily time frame. If you look here, and the price can possibly retest this previous zone that has been broken. So that is something with the long term traders. Now for the short term traders, once the price hit my 50 EMA or close below 50 EMA with just one red candle, and the very next candle close back above 50 EMA, forms the bullish engulfer, we are gonna go long from here and keep on taking longs till the price hit the next major level. A big level here on Capital.com is 3.427, goes to 3.633, from where we're going to start to look for the bearish engulfers, so double top entry conditions. So keep an eye. It is an area from where I will looking to enter my sell trade. For now, just pullback entry bullish if we get a condition. If no condition, price can still keep on pushing down to this zone that is likely. If we are broken below 50 EMA only, then I'll start to look for the zone below. For now, 50 EMA is an area from where start to look for my buy conditions. Exactly the same on NEMEX. The zone has been mentioned in my previous video. Nice divergence happened and nicely pushed down out of this double top pattern. We are now approaching 50 EMA. Again, bullish engulfer will be my entry condition, and the price pushes back up, break above this high. I'm going to start to look for the next pullback entry bullish and keep on taking longs till we are in the zone above, which is a big level. Right up there, as you can see the numbers in blue, from where we're going to start to look for the bearish trades only. For now, just look at the pullback entry bullish if we have. If no condition, price can still fall and keep on pushing down. Remember that we still do not have a bearish condition. We have been rejected from this area, and that area can push the price massively down as well. That is why conditions are very important, and we can see a possible pullback, a big and deep pullback out of Netgas, looking at this nice rejection twice from this zone. Condition for buy will be above 50 EMA if we have that. Next up we have gold. Gold is still ranging sideways, and as you can see, we are still waiting on the price to break above this high. Once we have broken above this high, only then we're going to start to look for the pullback entry bullish and keep on taking longs. The reason the gold is very slow, it is because of silver. As you can see, the rejection from the silver from this major zone has been happening couple of times. That is why we still have a chance that silver will push down from here, and then it will likely to head high. We have this bearish engulfer at the double top pattern, push down and we can still see a push down out of silver. As long as we are not close above this zone with a solid candle, we are not looking for buy trades for silver. So I'm still bearish for silver, not bullish unless we are broken above this high. Once we are broken and close above, only then I'm going to start to look for the next pullback entry bullish, and then we are looking at the level above for the possible counter trend trades. So let's see which pushes first. If gold push first, then it will also take the silver higher. If gold pulls back from here, then it will also take the silver down, and gold can then push down to this recent anchor from where we can start to see gold and silver to move higher side by side. So that's what I'll be looking at for gold. Just break above this high for me will be a confirmation that gold is now want to push up and continue to push up in a trend. Otherwise, pullback is expected till here from where we can see another bounce out of. For silver, I'm expecting a price to push lower. Finally, we have crude oil. Now for crude oil, I'm going to adjust my Fibonacci tool again, which is something like this. Now, as you can see, 50% entry has been triggered. It is something very risky again. If you're a risky trader and want to take a risk, it's totally up to you. Do not take my words on it. It's just my opinion. Nothing should be taken as any sort of trading advice. For me, I would enter right at the 50% to keep my stop loss below, and take profit can be 1.618 retracement. That looks something like this for the bigger target. That is 1.4 to 1 reward to risk ratio, almost 1.5 to 1 reward to risk ratio. So that is what I'll be looking at for crude oil to push higher, hit 1.618 retracement for the aggressive entry. But for the less aggressive entry, either this zone, which is 72.24, goes up to 73.35. If the price pulls back to this zone, forms a bullish engulfer, that will be a good entry, or double bottom will be a better entry. So that is what for the less aggressive traders, or just a pullback above 50 EMA followed by bullish engulfing pattern. In that case, that will be a buy signal, just a pullback entry bullish with a bullish candle. So that is what for the less aggressive entry. Otherwise, aggressive entry has been triggered. I'm looking at 1.618 retracement for the targets for crude oil. So that's it for commodities, guys. Hope you got a value. If yes, give this video a thumbs up. Subscribe if you're new, so we can all trade together and trade efficiently. Hope to trade green. See you guys in the next video. Till then, take care.